What's going on, everybody? It's October 10th, Monday, episode of Daily Logs number 26. And today I'm going to cover what happened. If you're inside of the Telegram chat, I'll go ahead and put the link below in the bio so you can join it if you haven't already. It's also my community tab. But today I walked everybody through a trade setup that happened. And initially with the New York session, pre-New York session, I made a quick little video, which I'll be doing every single day, with my initial thoughts. So don't take it as a concrete analysis because things can change really fast. And I explained how, as an experienced trader, you're able to kind of switch your bias and get into sync with order flow pretty quickly if you are not stuck on one bias and really trying to push one bias. But today, in the pre-New York session, I was looking for this fair value gap to get traded into because it's inside of a premium. Now, I also annotated this fair value gap very slightly. I didn't go over it long, but I watched my video back. I did annotate it, and I said we're inside of this balanced price range. Okay, so that is a sensitive area for price. And I'll go down to lower time frames. I didn't mention on the 1 hour the fair value gap in the video. I did post it, and I did say I'm looking for this sell side to be taken. And I believe it was 30. I'm sorry, it was 3605. So that's what I was aiming towards for the day. Let me jump out to a daily time frame real quick, just so we can review everything. I was stating in the morning vlog, or whatever log you want to call it, I wanted to see something like this. I wanted to see the daily candle. I wanted to see it a little higher, to be honest, but I wanted to see it create this fair value gap on the daily time frame. It's really what I was looking for, because what this is going to set up for potentially tomorrow or the rest of the week, I want to see price possibly trade back into this fair value gap and then see price go lower. It could stay open as a breakaway gap, which means price is super bearish. We don't need to come back on that fair value gap, and we'll just head towards the sell side liquidity, which is our overall drawn liquidity, the narrative for the week, right? This is the overall narrative for us. We're looking for lower prices, so we should really only be hunting short setups. Okay, so going out to a 4 hour, today we punched into that fair value gap right here, annotated between this low and that high here. I'll get rid of it just so you can see it, coupled with the balanced price range. And then if you go down to the 1 hour, we have a fair value gap resting here, which I actually didn't even annotate in yesterday's predictions, and I didn't even annotate it in today's morning session. I woke up a little bit sick, to be honest, so I was not 100% on point. You can hear it in my voice right now. But as soon as I saw this, and we were getting a really nice reaction, I immediately switched gears. So to give you a perspective, if you weren't in the Telegram and weren't watching, this is kind of what price was looking like when I annotated this low here. So this grabbed my attention. As soon as I saw that we were reacting off of this quite nicely, that was a huge indication. And I'll go down to a 30-minute. 30-minute, that little fair value gap is in the exact same area, which is good. You want to see layered PD arrays. So you have your parent PD array, which is the 4 hour, then the 1 hour, then the 30-minute, and then you also have the 15-minute, and then you also have the 5-minute here as well annotated. So by this time, I actually missed the initial move that would have been the best shorting opportunity, and I stated that. I was watching this 4-minute time frame, and I stated at first there was a bullish S&P. NASDAQ dropped lower than S&P and Dow, or US 500 and US 30. So that to me, because I was leaning bullish initially, I was looking at that. I said, note it, just pay attention. And the only way we'd be bullish is if we closed above this 4-minute fair value gap. Because I saw this push into it. I wasn't exactly sold yet on the bearish bias coming into the session. And that's partly due to the reason that I really didn't see that 1 hour fair value gap. I wasn't paying attention to it as much. But once I saw this nice displacement lower, I said, okay, Now we can start really hunting for shorting opportunities. So I was looking at the 5-minute and I noted in the Telegram chat, I said, go ahead and note your 5-minute fair value gap. So this was probably, I set it right around here because it was already formed, right? And we're looking for the lower prices. We're looking for the sell side liquidity to be swept here. So this is our previous day low. That's a major draw on liquidity for us, which is also the previous week low, major draw on liquidity. If you go back to my power of 3, when you start off the week, you're always looking for that previous week low to be ran out, which is usually the best opportunity for your setup, right? So once I saw this, I kind of knew immediately we're gonna head lower. I kind of just want to annotate the first, I guess, YouTube model from this low here and the high here. This is your fair value gap. So that's a reclaimed fair value gap. Used it a few times. It was quite sloppy. And that's the reason why I was quite hesitant to really go short right away. We punched into it multiple times. If we got the 4-minute, it's a little bit more clean, just a couple times in there. And even if you had your stop above the high here, you would have been perfectly okay. So that was definitely the best shorting opportunity. And then if we go back to the 5-minute, let me set up the YouTube model just so you guys can visually see it. You can go over to my Twitter and see the actual markup of it. We have buy stops being ran at multiple levels here, so I don't want to indicate exactly where. But you have buy stops being ran here, here, this high, and we retraced into that fair value gap, which is coupled with 15, 30-minute, 1 hour, 4 hour. Really strong indication, right? Then we see our nice displacement lower. Okay, so that's our nice displacement lower. Next step, we're looking for that premium. So I'm looking at the dealing range on like a 2-minute. Okay, so dealing range high would be here, and then down to our dealing range low. So if you ever can't find it, like let's say on a 5-minute, you can jump down to a 2, 3, or 1, and you can find your dealing range. It'll be a little bit easier. So then I'm looking at this fair value gap, and I set my limit right at that 50%. Okay, because you always want your shorting opportunities to be inside of a discount or a premium. So I set my limit here, and I actually walked away from the charts. I was making breakfast, and I looked at my phone and I was like, shit, I gotta update the Telegram chat. So I said, if you went short, your stop loss should be above the high here, which was 36.48, which is a dealing range high. That would be invalidated if we went above it. So I said to put your stop there. Price got a little bit aggressive, but I'll mention here. So the dealing range low is actually right here. But if you look at the bodies, even though the wicks went above the fair value gap, I've always taught you guys to pay attention to the bodies and the closure of the candles, because that's going to be telling the story and the narrative of what's really going on here. So I took a little bit of drawdown. I think it was right about, yeah, about 5 points. So it's a little bit rare for me to get that much of a drawdown, but it's perfectly okay. That's why our stop loss, we pay our stop loss to do our job. So our first partial was underneath the low here, which I annotated 36.21. And then I actually was, I said 36.08 for some reason. I meant to say, and I know I said it somewhere, 36.05. That's the previous day low. And that was our overall draw on liquidity for the day. And you're just taking partials along the way, because no matter what, you don't really know. Price could have, retraced right back into your entry after we took out the low here. So, and that you're already up almost 15 points. That's more than you really need as a starter or a beginner. And it teaches you good money management. Okay, so it was really beautiful to see. Price just came right to our target right away. I mean, 5, 10, 15, 20, 25, 30, 40 minutes to get to our target. It's quite nicely. After you take out the previous day low, for me, I'm off the table. I don't really need to sit in here and try to get the most out of everything. I'm going to actually hop over to the futures contract, because for some reason the indices gapped, and I don't like that price action. It looks really odd to me. But if you look at the futures contract, it was really, really nice. We came into this fair value gap here. Pay attention to the body closure. Okay, so if you want to get really fractal with the YouTube model, inside of that retracement from the dealing range high to the dealing range low, I'll annotate it. You're looking for price to be above the equilibrium to go short. So inside of that dealing range on the 1 minute, I guarantee if you went down to like a 30-second, 15, it'd be even cleaner. This is the YouTube model. You're taking out buy stops. You have a displacement lower. You return back into the fair value gap here on the 1 minute. So that could have been your shorting opportunity. Even on a 5 minute, this could have been your entry here. We displace lower again. We have another fair value gap here. And you'd be targeting the sell side resting here and underneath here. So that could have been a great shorting opportunity. The reason why, to me, this wouldn't be a great shorting opportunity, it's inside of the lunch hour from whatever time zone you're in. But this was inside of my lunch hour. So for me, that's a rule for me. I don't trade that. If you go out to a 15-minute, let me go ahead and find price. Price retraces back into this bearish order block as well. So do you see how you're using a lot of different PD arrays and you're using higher time frame parent PD arrays with lower time frame narrative? There's so much to it, but once you can start really getting the hang of it, things become very easy. So if you're just looking at simple dealing ranges, which is the first thing I start with, dealing range high to dealing range low, you're looking for price to get above the equilibrium into a premium, order blocks in a premium, but I don't really use order blocks as entries anymore. I use it as just a confluence with lower time frames. So that was basically it for today with the entries that you could have gotten. There was 3 different opportunities on that 4 minute here, the one that we took here, and then the other one that you could have took either one of these, honestly. You could have took and put your stop loss above here. It's a good shorting opportunity. Looking at, I believe there's a couple SMT divergence. So let's start at US 500 so we don't confuse anybody. So we're looking at US 500. Let's go down to US 100. This is the only valid SMT that I saw. So US 30 was making this higher high here at 8:30 my time. So pay attention to 8:30 at the bottom there. NASDAQ was making the higher low here, right? It didn't make that higher high along with US 30. And same thing with US 500 was making that higher low here. So that's a bearish SMT divergence. And you only use SMT when your model forms. So you're using SMT as a confirmation tool. It's not something that you just see SMT and you automatically go, long or short. And even when I post that in the Telegram chat, I hope you guys understand that. It doesn't mean it's just something I'm looking at. Price can move so fast and so quickly. And I talk about how you're not supposed to marry a bias. Definitely be confident in your bias, be confident in your analysis, but be able to be like water, just be able to kind of flow with the market. I mean, still have your rules and everything in place. You're still following your criteria, but as a prime example for me this morning, like even though I got my initial analysis wrong, doesn't mean I'm not a profitable trader. I'm still able to get into these markets. There's no opportunity to even go long. Like that's the beautiful thing about the YouTube model is it gives you that extra confirmation. Like there was nothing in here that would have signaled me to go long. The only way is if we broke above this high here, created that nice displacement, had a nice fair value gap, and then we went long. So there's nothing in here for us to go long. And I think that's it just for the morning session. Let me touch on what we're going to possibly do tomorrow. Personally looking at it, I know I talked about the daily time frame and how I would like for us to come into that little fair value gap. That would be amazing. Do I think it's needed? No. We do now have a volume imbalance here. So look at price as like a paint roller, as ICT says. Expect price to possibly just roll over that, fill it, and then come back down. There's a few things that could happen tomorrow, but I'd like to see this volume imbalance get filled. If we do get above the previous day high, then we can see this not small, but this fair value gap filled in, and then we go short. But overall, I'd like to see price just go lower. And I think that's going to be it for tonight. Until tomorrow, good luck and good trading.